Theo Trade. This is Don Kaufman. It's September 12th, 2018. You are watching the Theo Night video. Well, let's begin with the fact that just about 12 minutes left of the trading session, and the S&P futures are what we term massively unchanged. People, it's a veritable slop fest of a market out there. And when I use the term slop fest, I'm typically proclaiming that there's no real direction. And if you take a look at this is the S&P 100 advanced decline line. That's kind of what I mean. 57 up, 43 down. It's as sloppy as ever. And the marketplace, I mean, what we're seeing today, highly unusual. And I've actually said highly unusual a lot in this last week here at Theo Trade. What's unusual? Let's break this down. Let's get specific. First of all, the financials. All right, let's bring them up on a chart. The financials in just the last few trading sessions, I mean, far be it for me to point out a little bit of a trend. I'm not exactly a market technician, but the financials are seeing ever so slightly some mild sell-side activity. But that's not what's unusual to me. What's unusual to me is, when was the last time that you saw the financials down 0.8%, and the S&Ps are unchanged, unscathed? In addition to it, we have what we term the monsters of tech. They too are down 0.8%. People, these are your two largest sectors. Okay? The name of the game today is rotate out of the financials, rotate out, okay, of the big tech. And big tech is Apple, it's Facebook, it's Google. Okay, Amazon's going to end up massively unchanged for the most part. Microsoft the same. Nevertheless, you can see the monsters of tech down 0.8%. And we haven't seen this where you get the two largest sectors down. In fact, I want to look at this on kind of a sector by sector basis. If you've never looked at this before, well, great, I'll take you into it. This happens to be the sectors in the S&P 500 as they stand right now. There's actually going to be some changes in these sectors in just the next couple of days. In fact, that's one of the topics of conversation this Friday here at Theo Trade, is we're going to explain some of the sectors that are going to be changing. But the point that I'm making here with this happens to be none other than, well, what do? We take a look. Here we have what? Technology. We have financials. We sell those, and apparently we rotate and buy everything else. Okay? This is asset allocation and tactical asset allocation at its most extreme. And what's so extreme about it? People, all we're doing right now is marking time in the S&Ps. Let's go look over at the SPX to make that point. When I say kind of marking time, we peaked out at some highs, but legitimately for the last 2 weeks, we've for the most part been unchanged in the broader S&P. So as I kind of call this a slop fest, it really has order to it. The order right now is, well, what was working happened to be technology. All of a sudden, tech, doesn't seem to be working as well anymore. So what do? We sell it, and then we buy everything else that's on the screen, without hesitation in any way, shape, or form. And that's precisely what we're seeing quite a bit of in the last couple of days. When I say stuff that wasn't working at all, I mean, you got to point out, over the last two trading sessions, they're even starting to buy the emerging markets. Okay, I mentioned the emerging markets just the other night in a video because we're looking for the bounce in the emerging markets. Why? We're actually going to short into the bounce. We got to wait, though, a little bit longer. You got to get those emerging markets back up here, 42, 42.50. Then I might look at the emerging markets as a bit more appetizing. Now, before I go on, and we're talking about this kind of sector rotation, right? And the reason, again, I kind of call it the slop fest out there is, well, the advanced decline line not necessarily showing any degree of correlation is, again, it's also locking the market within a given range. Now, in another situation here, as I brought up a moment ago, we have Apple. Okay, not much to say. They have a new phone and another new phone and another new phone. Well, apparently you can actually talk on these phones and you can take pictures with them. It's revolutionary. Oh, and they have a watch. I've had that watch for a couple of years, but it's another watch. There was nothing groundbreaking out of it. At this point in time, though, I have to tell you, I'm relatively surprised how well Apple is faring on this. Okay, meaning that, could have anticipated a lot more downside activity. Why? Well, Apple earlier today had over a $6 expected move. It's now contracted to $4 and some 70 cents. Nevertheless, it did have a $3, kind of move to the downside, but only to the tune of 1.3%. So what we're finding, in Apple is they're very likely shifting, and traders are kind of shifting to the idea this is going to be a little bit more maybe of a services business and not so much based on the hardware. But you kind of feel like right now, that traders and investors alike could convince themselves of anything to support value in this marketplace. All right, again, kind of switching gears entirely. Let's cruise over to the SPX, the mother of all products. Now, the SPX, throughout the course of this week, had an elevated expected move. For those of you that do not remember this, we go to the Analyze tab and you can go to Think Back. On Think Back, just drive Think Back to like Saturday. What am I doing? All I'm doing is looking back. What was the expected move, for this entire week? And it was right around $42. So we had this $42 anticipation, which again, on the weekend video, I had said listen, that's rocking. Right, $42 expectation of movement. Why was that kind of rocking? Because in the previous weeks, all right, so this is, a 4-day week and we had about a $30 expected move. This was about $32 expected move. But here we had this big $42 expected move. That's $42 higher, $42 lower. And right now, what are we getting? We're getting nothing. I mean, it's been slow. We've had just about 20 points of movement in the S&Ps. But again, it's been incredibly slow this week, which leads me to believe that Thursday or Friday of this week, we could still see some decent amounts of volatility. What's that predicated on? That's just not a notion. If we cruise over to the S&P futures, and again, we just have 4 or 5 minutes left to the close here, but if you cruise over to the S&P futures, one thing that is really, really notable here, you had a couple of down trading sessions. You've been doing about 1.5 million contracts a day. I just want you to know, the S&Ps today are almost completely unchanged, but the volume is still there, which means that heavy amounts of positioning, are going on. Now, let me further kind of just that logic. Let me kind of reiterate some of this logic of why I expect a bit more volatility. First of all, the volume is there inside of the S&P futures, which tells me that people are hedging. People being trading firms are hedging. The other aspect that's notable is taking a look at the SPX. The SPX again today is going to finish for the most part unchanged, but its volume is not. The volume is rocking. The volume is doing 1.1 million contracts inside of the SPX. I also took a look. I thought to myself, I'm like, wow, that VIX, it's just dead. It's done nothing today, right? Really? Because over the last 5 trading days, right now it's trading 1.5 times its normal volume versus the previous 5 trading sessions in here. So there's volume, There's activity. There's just no movement. And that's why I kind of called this the slop fest. We should shake it up a little bit in the next 2 days. Coming into Thursday or Friday, expect some more volatility. Last, but definitely not least, we've had a position on inside of the financials. Now this is the financial ETF, but to get specific, our position was inside of JP Morgan. We rolled it today. For those of you that were inside of this position, we took the 140 puts. We had these deep in the money puts, and we took these 140 puts. We sold them. These are the ones we own. We sold them, and we were capable then of purchasing the 125 puts and did it for just shy of a $15 credit. Now, I've traded this a couple of times today, but I'll actually show you the exact create the duplicate order over here, the exact trade. The credit I received is $14.80, an absolutely mammoth first roll. Why? Because we just rolled $15 of risk off of the trade. Now, for those of you not necessarily in tune with this, what we were doing was taking a bearish position inside of JP Morgan using a deep in the money put. As JP Morgan started to slip down, it gave us opportunity to pick the trade up, roll it to a future expiration, and swipe $15 of risk off the table. Lots to think about, again, as we appear to be approaching a more volatile end to this week. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.